Fellow traders, 'tis I, the Rumpled One, coming to you on Monday, December the 1st, the year's 2025. Let's talk trading. Weekly open and gap, monthly open. These videos are for educational purposes only. Your results may differ from mine. Okay, it's the last trading month of the year. So, if you haven't gotten it right, let's get it right. Make sure your risk management's always in place so you don't lose more than you're willing to lose on a trade or during a trading session. So, we'll take a look here at the pound dollar. And right now, we are 18 pips above the monthly open. We're 40 off the high and 29 off the low. Notice we are in between the wick zones on the monthly candle. For the week, we have one pair. The dollar yen did not fill that gap. The pound is 18 pips above the weekly open, which is the monthly open, which is the daily open. Today, we're 40 off the high and 30 off the low. And looking at that price and looking, we've actually come through the buy, or not the buy zone, but the launch pad once. And it looks like, see, 75 was the high, 40. So there was 35 pips coming out of that launch pad. We're putting in the opening range for the week and the month right now. And just so you know, we're still above the opening range for the year. In fact, by almost 700 pips. So we are 725 pips above that yearly open. We're 555 off the high and 1,135 off the low. Remember, last week, this number was under 1,000. So anybody playing out of that lower wick zone here, or maybe a rat reversal trade on the monthly, that would have definitely paid off. We had an inside bar 6 days ago. We're above that range. We had an inside bar 6 weeks ago. We're below that range. And let's see, we had an inside bar 23 months ago. That's almost 2 years ago. And we're above that range. And there's definitely some action here, inside bars on other pairs. So far today, 70 pips of range. Okay, the pound yen, also known as the beast, is leading the pack with 156 pips of range. And dollar yen's no slacker, coming in at 149. I mentioned the buy zone. You can see here a couple of, let's see, 1, 2, 3, 4, 5. It looks like during the late Asian session, early London session, we had a lot of action through the buy zone. There's only one short trigger, but that you would have had to hit your stop. You could have made it back on the next, within the next hour. You know, a lot of people have trouble with the buy zone because they say they get whipsawed, this, that, and the other. And what you have to understand is this is trading, and we don't know what the outcome is going to be. We just don't. So it doesn't behoove us to think like that. So if you're having inconsistent results, first place to look is in the mirror. Maybe there's something you are doing that's not consistent. Maybe you're not waiting for your trade properly. Maybe you're not taking every time you get a signal, because sometimes those ones that you don't take may have paid off. Maybe you're not properly executing. Maybe you're a little too early or a little too late, just not waiting for the signal. So, I mean, you can look at, you come back near the end of the day, you can see that, yeah, sometimes you might lose, but then again, sometimes you win a little, sometimes you win a lot. It just depends on you. I mean, question is, if you took this trade, would you be willing to sit in that trade for 2 hours to capture that profit? That's something you have to ask yourself. It might not be your style. I mean, maybe you just stick it, you're up 5 pips, maybe you put a 2 pip trailing stop on it and you get what you get. But you see, during this time, the range was compressed. And usually by the end of the day, it has to expand. So are you willing to sit in that trade? And speaking of sitting in trade, the rats. Looks like you've had a few opportunities here. The red rats, that is. Green rats, the range was too low. So that wasn't a rat trade. Bambino flex indicator said to go long. Price near the pivot. It was called short by the pivot trading plan. And you can see here, there was a couple of times if you had taken those shorts, would have paid off. But sometimes if you go to the well too many times, it gets you. So, once again, you have to use some common sense and saying, how many times is this going to happen? What's the chart telling me? I mean, here you've got high or low. Here you've got a higher high. The candle basically covered, and then it bounced at the pivot. I mean, the thing is, you don't know. So if you took that trade because that was your signal, even though it's already paid off a couple times before, you may have gotten stopped out. That's just the breaks. But when you can see other things that tell you, maybe, maybe not, then maybe that's when you don't take the trade. And that should all be part of your trading plan, to evaluate reasons not to enter. And the thing is, so many times when we're waiting for the trigger, that's all we're waiting for. We're waiting for those things that give us a green light. And we're not looking at anything that says, hey, maybe that should be a yellow light or a red light. Don't even go, just wait. Okay, we did take out the daily pivot. We missed the weekly pivot by 10 pips. And for the month, it looks like we finally took out that monthly pivot. I can't remember, did we take it out last week? Or did it just get taken out today? Oh yeah, looks like we missed it and then it got filled. And now we had pretty big wick zones once again. So in and out of the both the upper and the lower wick zones. You can see that price action. And notice, it looks like we hit that launch pad. And price is now at 44. 70 pips of range, 0 percentile. Plenty of room left. So let's see, we went down, bounced at the previous day's open, came up through that launch pad. Notice here, when you look left, all those imbalances were filled. So it looks like price came down. Let's see, I guess with the market profile, this would have been the order block here. Taking a quick look, we had a lower high trigger here at 34. That would have been a very nice trade. Of course, somebody might say that's hindsight. Taking a look here, we haven't pushed the range yet, but what we need to take a look at is, let's take a look at the ATR 435. And so looking at the ATR percent, we're at 16. So 1, 2, 3, 4, 5 we hit or exceeded. We came ATR, we came close in May. I got August, October in the 90s. So looking here, doesn't look, chances of hitting that ATR don't look good. Considering last month it was the almost the worst or the lowest ATR percent. Lowest here is 50. No, lowest was 44. And then we had a 50. So we'll just have to wait and see what happens there. The trade reminder, price inside the upper wick zone on the monthly, price turning up, buyer strong control. On the weekly, buyer strong control, price turning up, price inside that upper wick zone again. Notice price is moving up. Once again, that launch pad looks like it's taken off. Now it's at 49.50. Too bad I was making the video instead of trading. That would have been a nice trade. Price inside the upper wick zone. Buyer strong controlled. Higher high, higher low. So, fellow traders, I hope everybody had a fun and safe Thanksgiving weekend. And I hope you all, at this point in the year, hope you all have improved. I hope something I've said has made a positive difference in your trading. And I want you to remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. And this is the Rumpled One, over and out.